New construction home builders are getting reamed so badly that now they're doing something completely unheard of. But boy, oh boy, is that going to be a potential opportunity for, yeah, you guessed it, my real estate startup house hack. Woo! Now look, I hate to revel in the pain of others because I actually think that falling real estate values is going to be quite devastating to our economy, specifically because, as the Case-Shiller reports, and Robert Shiller from the Case-Shiller reports tells us, from Yale, PhD economist, hey, housing is much more impactful on someone's ability and willingness to spend than stock valuations are. That means as home prices come down, we're probably going to see a deepening of that earnings recession in the stock market. And boy, that is not looking great. So, we've got to talk about some of the crazy things happening now. I think some of the early things that we could just get out of the way are the following. In July, the National Association warned that we're already in a housing recession. New construction home builder prices, that is prices for new construction homes, have risen to the highest relative income level that we have not seen since the 1980s, when we had substantially high inflation. So basically they adjust income for price. And what did we end up getting? Look at this particular chart here. It's a chart that shows you we are at a ratio of 0.5, which we have not seen since approximately 1988 and again in 1984. In other words, real estate for new construction homes has been cheaper for the last 40 years than at any point compared to today. And now it's no surprise that home builder construction activity and spending is starting to inflect down. Now, home builders did something really funny. As they waited for supply chains to catch up, they actually purposefully didn't put homes on the market because they thought, hey, well, the market's appreciating. Let's just wait to put homes on the market. Because we'll just be able to sell these properties for more. Like, why lock in buyers at early prices when we could just wait because prices only go up? Yeah, well, now housing starts are declining, construction spending is declining, and it's all happening naturally because it's becoming a lot harder to actually sell new construction homes. We're seeing cancellations that we haven't seen before. According to Pulte Group, D.R. Horton, and Lennar, all of them are seeing an increase in cancellations in all of their markets. But things get even worse in specific markets, especially the Zoom towns. Remember, the Zoom towns are towns like Phoenix, Boise, Idaho, parts of Florida. And these are areas that are not bad areas. They're just areas that are going to get hit by this housing crisis even more than others. But CBH Homes, which is a big builder in Boise, Idaho, and throughout Idaho, saw 1/3, that is 1 in 3 of all of their contracts cancel. That's twice the level they saw just in January. And a lot of people in January, myself included, were already screaming, uh-oh, might not want to buy real estate because we might be at the peak. And so compared to January, we're at twice the cancellations in Idaho. And so really what's happening is builders are getting stuck with too many homes as U.S. homebuyers pull back, especially since homes are becoming as expensive as they were in the 80s relative to income, which is bad. It's a high level of expensiveness, right? Again, reiterating, they've been cheaper for the last 40 years, and now they're expensive again, like really expensive again. And so it makes sense that mortgage applications are also now at a 25-year low, because it's just so freaking expensive to get a home loan right now. The average mortgage rate did tick down slightly because we finally moved off the 10-year treasury yield. And remember, when we move off the 10-year treasury yield and we see the 10-year treasury yield come down, it came down from 4% where it was to, I believe right now it's sitting right about 3.7%. Mortgage rates are going to tick down slightly, which is actually a good thing. It's actually right now at the time of this recording at exactly 3.828. So it's actually jumped back up. It's trending back to that 4%. It went down as low as 3.6 the other day. But anyway, despite these sort of daily fluctuations in treasury yields are higher than they've been at any point in the year when you just look at the last 3 weeks. The last 3 weeks, treasury yields have been the most expensive they've been at any point since like years ago. And the point of that is to say that interest rates for mortgages are going to be at the highest point that we have seen in a very, very long time. That's why the average 30-year fixed rate mortgage right now is sitting at 6.66%. Yeah, 666. If that's not an omen, I don't know what is. But anyway, you look at this chart and you look at mortgage demand. not only has it fallen off a cliff, but if we draw the bottom of this cliff all the way over to the left side here, we see we have not actually seen this low level of mortgage demand since 1995, 1996-ish, right around that region. That's insane. I mean, that's a massive, massive plummet in mortgage demand. So you're seeing less people buy homes. You're seeing more cancellations, but you're also seeing a larger backlog of new construction, and this is actually what's creating a crazy opportunity. Now, a shameless plug, I just want to ask you to subscribe. That's all. Really appreciate you watching the video. Okay, in June, and this is wild, okay? In June, there were 824,000 single-family homes under construction. That is more homes under construction than any time since 2006, October to be precise. We're currently at 9.3 months of supply for new homes. This is insane. That is a massive backlog of homes. So it makes sense that builders are cutting back on new home starts. But it's also insane because it's like, holy crap, we're about to get flooded with even more in 2023 as builders try to clear their inventory. And this is where a unique opportunity is coming up, which if you want to take advantage of unique opportunity, learn everything I know about real estate by joining the 0 to Millionaire Real Estate Investing course. There's a coupon code linked down below. We're having some issues getting our Shopify store up for this new product that we're launching. That's right, Kevin's having issues getting it up. You know, maybe I'll get a sponsor for somebody who can help me get it up one of these days. But in the meantime, you can still use that coupon code down below. Get lifetime access. We are going to be removing lifetime access to the private live streams, real estate analysis, stock analysis, once we launch this new product for some of the things. So check out the programs linked down below. But we do have a little bit of a delay there in launching this new product. Kevin, come on, man, get it up. But anyway, so if you want to learn everything in my brain, courses, okay? People are like, oh, I could Google this. I don't know. Watch some of my videos and then ask, can you just Google clone Kevin? I don't think so. And that's not to pat myself on the back because I think I'm a little crazy, okay? But anyway, what are home builders doing now? Woohoo! Okay, well now, listen to this. This is where it gets absolutely insane. There have now been multiple interviews with executives, especially this one rental home investment company, Kinlock. And apparently, their co-founder has been getting offers directly from new construction home builders to purchase thousands of completed homes with discounts of up to 20% off what they would charge retail buyers. Why would they do that? Why would you take a 20% haircut from what you could charge retail buyers? Why not just take a 5% cut and sell it to more retail buyers? I'll tell you exactly why and what's happening, in my opinion. So my opinion is in order for you to be willing to take such a massive cut, that is, the real estate market has gone up and then it's sort of peaked, right? And now we're kind of expecting it to do something like this, right? So we're probably there, okay? So really what the home construction builders are saying is, hey, look, we'll sell you these homes right now at a 20% discount for the following reasons. One, we need money. Number two, because if builders don't want inventory, okay? They want the money back so they can put the money to work. They can put the money to work by buying back their stock if it's cheap, which right now builder stock, some of them are selling below book. That's like getting a wedge deal on your own freaking company. It's amazing. They could redeploy that for future investments or making sure that they survive the recession in general. So there could be a lot of reasons why the builders need the money now, not later, because selling it to retail is going to take a lot longer. It'll take maybe a year, as opposed to selling it to an investor now will take 2 months. Now, the other potential concern here is that, like, is this an omen in terms of how bad they think the real estate market is going to get? Well, if they even remotely think that home prices over the next year could fall another, let's say, 15%, does it potentially make sense to take a 20% haircut now because home prices are going to fall in value 15%? Yeah, maybe. Maybe. And this is why, like, for example, for my company, my real estate startup, which if you're accredited, you could get founder shares in right now. You just go to househack.com and read the PPM. That's why for me, I'm looking at this like, hey, I'm not necessarily chomping at the bit here to say, you know what, I need to get in on those 20% discounts now. To me, this is just the start of the panic. really, when the panic bottoms is when we actually start seeing treasury yields peak and really consistently and meaningfully come down, which they probably won't until the Fed is even remotely close to U-turning. And given that Marie Daly and, pretty much every board member at the Fed is coming out going, don't expect a quick U-turn. We ain't U-turning quick. So, Fed policy is going to linger pretty aggressively for longer, right? Higher rates for longer. So why else would you potentially, if you need the money, cut? Well, because really you think you're going to get less in future, right? And then adjust it, obviously, for your op cost, your opportunity cost. So basically, if they think their opportunity cost is 10%, and they could sell the homes now for a 20% loss, but then they can make 10% back with their new opportunities because they have access to the cash, they've only lost 10%. If they hold the properties and they fall in value 15% to retail, and it takes them that whole year where they can't use that money, they lose that opportunity cost, now they're down 15%. So would you rather be down 15% or down 10%? Either way, the point here, like no matter what it is, the point here is obvious. Builders are bailing. Wells Fargo reported that September, that just happened, okay, was the worst month for builders on record. And that Wells Fargo is reporting builders are seriously now considering unloading homes to investors. It's not just this one executive saying it. It's even Wells Fargo saying it, okay? It's like, this is a serious problem. The builders are ringing the alarm bells like crazy. And again, when I hear this, I just look at this as an opportunity. If I'm an individual, I'd be like, all right, you know what? Like, I had somebody the other day, they're like, hey, you know what? I'm gonna get another job. Because Kevin, you're right, I'm gonna increase my income so I can go buy a deal when home prices come down. We're not expecting them to come down like Great Recession levels, but at least let me have my income up and my debts low. Let's stop financing cars and furniture and refrigerators and stupid consumer stuff. Let's save money, let's build our income. Let's pay more in taxes. I know that sounds painful, but pay more in taxes so you can qualify for more, right? The danger of being self-employed is you write everything off. Hint, you could depreciate your expenses. So like if you buy, okay, let's say, okay, trick, you buy a new iPad for $1,500, which is insane because you had to get the stupid keyboard with it or whatever, okay? Depreciate it over, talk to your CPA 3 to 7 years. Don't take the full write-off this year because they add depreciation back into your income. If you write it off in full, you'll be able to qualify for that, for less, right? Anyway, that's more of an accounting thing. Talk to your accountant about that. I'm not an accountant. But I am really excited again to invite you. Not only are the courses linked down below with a brief extension, but also we've raised almost $30 million in a month. If we can get to $100 million, because we expect the first month to be the biggest sort of burst, but if we can get to $100 million raised in the next probably 3 months or so, but maybe by the end of the year, beginning of next year, then we're gonna have over $300 million of purchasing power. And if next year things are really in pain and we're able to go up to builders in great locations where we could do long-term and short-term rentals and really milk cash flow, and we're able to go, hey, we've got $300 million to spend, we're gonna actually have negotiating power, negotiating clout. And so if you wanna be part of this on the ground level, founder shares, 1-to-1 valuation, no dilution day one, consider going to househack.com. All right, folks, we'll see you in the next one. Bye.